Take a look at the gold market today. We're up 0.2% at $1,127.70 the ounce. That's almost a gain of $7 on the day. But gold has seen quite a pullback in the last few days, pulling back about 6% over the last week alone, but it's still up over 12% for the last 3 months. A lot of people are wondering, though, whether, at least intermediate term, the gold bubble has burst. Joining me now to talk about that is Bill Struzzulo. He's partner and chief market strategist at Bell Curve Trading. He's been taking a look at the commodity itself. And Brian Sutland, president of Sutland Equities, and an options action contributor who is taking a look at the GLD ETF. Gentlemen, welcome. Nice to have you here.
Good to be here.
Bill, I know that longer term you've been very bullish on gold with, I think, a longer term target of about the 1,400 mark. So what do you do in this environment where you see a pullback of this magnitude? You know, a lot of people wonder whether the bull run in gold is over.
I don't think so, Sue, and you're correct. I mean, we still have a target of 1,400, so I still think there's plenty of upside. But we are in a corrective phase right here. We hit an important intermediate term target around 1,200. I talked about this on Fast Money, that we'd have a profit-taking opportunity anywhere from 1,150 to 1,200. We've got that. I still think we're going to pull back further, somewhere to around 1,090 to 1,050. I want to take advantage of that weakness and reset long positions because there's still plenty of upside here.
Brian, for the first time in months, puts on the GLD are now more expensive than the calls. In other words, people are willing to pay a lot more money for protection to the downside rather than buying the right to buy higher in the future. What should we read into that? Does that mean the market's gone bearish here on gold, on GLD?
Well, it certainly is starting to give a little bit of indication to that fact. You know, when option traders come in and start wanting to own options rather than actually own the underlying, the instrument itself, that tells me that things are a little bit disconcerting in terms of the underlying instrument, in this case gold, the GLD. Now, when they come in and buy these puts, it's telling me right now that when you get this turn and this reversal that we saw earlier in the week, you know, that was huge volume to the downside in the GLD. And at the same time, you saw the puts getting bid up. That tells me there's some nervousness here, and I don't know that gold can hold on longer term to move higher. You know, Bill talks about that 1,400 mark. Certainly, I had that my eyes on that too. But this recent turn of events and rise in volatility in the option market is telling me that maybe gold is headed for a pullback, and a hard one at that too.
Gold, Bill, is up about 39% over the past year. How much of that rise was based on fundamentals and how much speculation?
You know, that's a good question. I mean, look, I think there are a lot of things driving the market now. I think, you know, a lot of it has to do with the weaker dollar. I think some of it has to do with people just wanting to diversify their portfolios out of the typical stock and bond holdings. I think some of it has to do with the insurance against geopolitical turmoil. So it's difficult to say how much of it is just pure speculation. But when I look at the charts, I still think you do have plenty of upside. I agree with Brian that we are in a corrective phase right now, and I think that corrective phase could take you a little bit lower, but again, use that weakness to get back in on the long side.
Brian, what kind of a pullback, though, are you looking for? You said that you thought it might be significant.
Well, you know, I would like to see some of the volatility subside a little bit. You know, you're seeing the GLD now move around 1.5%, 2% a day. Typically, it only moves around 1%. So I'd like to see some of that volatility subside a little bit before I can be comfortable being a long-term investor in here. You know, I tell people you got to look at volatility. Volatility is giving you an indication of how much you can allocate to that certain stock or instrument in this case. And until I see some of that volatility subside, I'm a little worried. I think there'll be a retest of the highs. It's a question of, do we peter out and not make a new high? And if that's the case, then I think gold is headed back down to 1,000 for sure.
Wow. Okay, gentlemen, thank you.